Welcome back to Weekly Market Pulse, where we regularly update you on the forces shaping the financial world. I'm Ether.
And I'm Bit. The past 7 days have been truly eventful, especially for those following the US stock market and the ever-exciting crypto space.
Absolutely, Bit. Let's start with the US stock market. It sounds like it was a real roller coaster.
That's a very accurate way to put it, Ether. The market experienced a volatile week, largely due to the impact of President Donald Trump's tariff policies. We saw key indices like the S&P 500 and NASDAQ come under pressure. This was mainly driven by investor caution surrounding US-EU and US-China trade tensions.
But I understand there was a bit of an upturn, right?
Yes, indeed. US stock futures rallied strongly by 1.5 to 2%. This followed a couple of significant developments: a court ruling that rejected some of Trump's proposed tariffs, and a very impressive earnings report from NVIDIA.
So, how would you describe the general sentiment among investors?
Quite mixed. Investor sentiment has fluctuated between concerns about tariffs and anticipation of key economic data, specifically the Federal Reserve's Fed meeting minutes and the PCE, or Personal Consumption Expenditures Index. We've also observed institutional money tending to withdraw from some sectors like steel and industrial park real estate, while technology stocks, especially giants like NVIDIA, remain a focal point thanks to positive earnings results.
What about macroeconomic indicators?
Personal spending in the first quarter was revised downwards, but personal income growth was stable in April, providing a basis for slight optimism. However, concerns about US trade and fiscal policy continue to weigh on the market.
A complex picture for traditional markets. Now, let's switch to Bitcoin. It rarely has a dull week. What's the latest price action?
As of this morning, Monday, June 2nd, 2025, around 8:12 a.m. Indochina time, Bitcoin is trading around 105,125 USD. That's a slight increase of 0.45% in the last 24 hours, according to data from CoinMarketCap and Binance.
And the past week, I heard we reached a new milestone.
We certainly did. Bitcoin reached a new all-time high, ATH, above 110,000 USD around May 27-28. This surge was fueled by positive sentiment from President Donald Trump's crypto-friendly policies and strong institutional inflows.
But it didn't stay up there for long, did it?
No, it faced a sell-off. After Trump announced a 50% tariff on imported steel, Bitcoin dropped to around 103,500 USD on May 29th. It then recovered to around 107,000 USD after Trump postponed the 50% tariff on the EU until June 9th, before stabilizing at its current level. So the price fluctuated between 103,000 to 110,000 USD during the week, marking an overall decrease of about 4% from its peak.
What does that mean for its market dominance and trading activity?
Bitcoin's market capitalization is around 2.087 trillion USD, accounting for about 54% of the total crypto market cap. However, 24-hour trading volume, while ranging from 16 to 40 billion USD, has decreased by 54.8% compared to the previous week. This suggests that trading activity has slowed down due to cautious sentiment.
Let's analyze the factors influencing these Bitcoin movements. Trump's policies seem to be a major one.
Definitely. The announcement of a 50% tariff on imported steel last week sparked fears of inflation and economic recession, leading to a short-term sell-off in the crypto market, including Bitcoin. The postponement of tariffs on the EU helped alleviate pressure, but market sentiment remains sensitive to trade news. On a more positive note for crypto, Trump's executive order to establish a U.S. strategic Bitcoin reserve has bolstered long-term confidence, with major financial institutions like BlackRock and Fidelity increasing their Bitcoin investments through spot ETFs.
And his general stance on crypto?
Trump's support for cryptocurrencies, including his Make Crypto Great Again posts on X, has fueled bullish sentiment. However, slower than expected progress on regulatory reform has led to some investor impatience.
What about institutional investors? Are they still buying in?
Spot Bitcoin ETFs continue to see net positive inflows, with a total of $45.3 billion in net inflows accumulated since the beginning of the year. Organizations like ARK Invest and MicroStrategy continue to accumulate Bitcoin, with MicroStrategy now holding over 250,000 BTC. However, institutional inflows showed signs of slowing down towards the end of the week due to concerns about macroeconomic volatility.
And how are macroeconomic data points affecting this?
The Personal Consumption Expenditures (PCE) index for April showed stable inflation, but expectations that the Fed will maintain high interest rates for longer are putting pressure on risk assets like Bitcoin. Interestingly, the recovery in U.S. stock futures, up 1.5 to 2% after Nvidia's earnings report, supported risk appetite, indirectly helping Bitcoin recover from its weekly lows.
Any insights from market activity like whale movements or futures?
Yes, large wallets on Binance and Coinbase, often called whales, were seen accumulating Bitcoin during price dips, especially in the 103,000 104,000 USD range, indicating confidence in the long-term uptrend. Open interest in Bitcoin futures saw a slight decrease, suggesting some investors took profits or cut losses after the price hit its ATH.
Security and regulation are always big topics in the crypto space. Any news there?
Online security issues like software wallet attacks and scams continue to be significant risks. Investors are advised to use hardware wallets and enable two-factor authentication, 2FA. On the regulatory front, while the SEC has delayed approval for some crypto-related ETFs, like XRP, the approval of a staked TRX ETF has sent a positive signal to the market.
Let's get a bit technical. What are the key support and resistance levels for Bitcoin now?
The main support levels are 103,000 USD, the weekly low, and 95,000 USD, the 0.618 Fibonacci level from the April low. Key resistance is at 107,000 USD, a psychological level, and 110,000 USD, the recent ATH.
What are the technical indicators telling you?
The 14-day RSI, Relative Strength Index, is at 60, indicating Bitcoin is in a neutral zone, not overbought but not oversold either. The RSI fell from 70 when the price hit its ATH, signaling profit-taking pressure. The MACD is showing a slight bearish signal, with the MACD line crossing below the signal line, but it's still above zero, suggesting the long-term uptrend is not broken. Bitcoin's price is still above its 50-day and 200-day moving averages, MA50 and MA200, reinforcing the long-term uptrend. However, the MA20 shows short-term downward pressure. Bitcoin formed a doji pattern at the end of the week, reflecting market indecision after strong volatility.
How about on-chain analysis? What's happening with wallet activity and network data?
The number of daily active wallets has slightly decreased compared to the previous week, but large wallets, greater than 1,000 BTC, continue to accumulate, especially during price dips. The percentage of Bitcoin held in long-term HODL wallets has reached a 6-month high, indicating long-term investors remain confident. The MVRV, market value to realized value, is currently at near 2.5, suggesting Bitcoin is in a fair value zone, not as overvalued as in previous cycle peaks, MVRV greater than 3. The stablecoin supply ratio has slightly decreased, indicating that the flow of money from stablecoins into Bitcoin has slowed, but it's still at a level supportive of an upward trend.
And overall market sentiment, you mentioned caution earlier.
The Fear and Greed Index dropped to 17 on May 29th, its lowest in nearly 2 years, reflecting fear after the sell-off. However, the index has recovered to near 30 as of June 1st, showing that sentiment is gradually stabilizing. Posts on X show polarization within the community. Some investors are optimistic about Bitcoin reaching 120,000 USD by year-end, while others worry about downside risk if new tariffs are applied. Large organizations continue to support Bitcoin, but retail investors tend to take profits at ATHs, leading to short-term selling pressure.
So, putting it all together, what's your short-term forecast for Bitcoin?
Well, for a bullish scenario, if Bitcoin breaks through the 107,000 USD resistance and holds above it, the price could target 110,000 or higher, 115,000 USD in the next 1 to 2 weeks, especially with positive news on regulation or trade. Supporting factors include continued ETF inflows, the Fed maintaining a dovish policy, or Trump announcing more crypto-friendly policies. Conversely, in a bearish scenario, if Bitcoin fails to hold the 103,000 USD support, the price could fall to the 195 to 198,000 USD zone, especially if fear increases due to tariffs or negative economic data. Risk factors include further SEC delays on ETFs, an unexpected Fed rate hike, or escalating trade tensions.
What's your advice for traders and investors in this current climate?
Long-term, accumulating Bitcoin at support levels, 103,000 USD or lower, remains a reasonable strategy, with a long-term target of 120 to 150,000 USD by the end of 2025. Short-term, investors should be cautious with high-leverage trades due to high volatility. Closely monitor news on tariffs and economic data, PCE, Fed minutes this week.
Excellent insights, Bit. A lot for our listeners to digest and consider. It's clear that both traditional and crypto markets are navigating a period of uncertainty and significant influence from policy decisions.
Absolutely, Ether. It's a dynamic environment, and staying informed is key.
That's all the time we have for this week's Weekly Market Pulse. Thanks for tuning in.